Welcome everyone to our 21st Business Breakdowns with Simply Better Brands. Before we get started, I want to remind all participants the purpose of this presentation is for informational and educational purposes only and should not be construed as a recommendation to purchase or sell any security. Microcap Club is not a registered investment advisor. Microcap Club, its partners, members, subscribers, and affiliates may or may not hold positions in one or more of the securities mentioned on this program and may trade in such securities at any time. Do your own due diligence and seek counsel from a registered investment advisor before trading in any security. I want to thank the Microcap Club community for tuning into this Business Breakdowns conversations with Simply Better Brands CEO Kingsley Ward and Trubar CEO Erica Grousman, along with VRG Capital's Fernando Masalan. Welcome, Kingsley, Erica, Fernando. Thanks for joining us today.
Hi, Adam. Thanks for having us. Real pleasure to be with you this morning, and look forward to telling you a little bit more about this great company.
Thank you. The business we're breaking down today is Simply Better Brands, which trades on the Toronto Venture Exchange under the symbol SBBC.V and over the counter in the US under the symbol SBBCF. Simply was originally profiled in 2024 by Schmidt. Simply Better Brands, soon to be renamed Trubar Inc., is a CPG company that incubates various brands in the global protein-based nutrition and wellness categories, with most of their products prioritizing clean ingredients. This is a fast-growing and massive segment of the market, including supplements, bars, and other nutritional foods. Simply owns the brand Trubar, the fast-growing plant-based protein bar that customers seem to love. Trubar is growing like a weed, has found product market fit and a customer base, and is growing both their wholesale and DTC businesses. Simply is at an interesting spot today because they can now be self-funding along with their small credit line, allowing us to avoid dilution, and the company's largest shareholder is also the CEO and chairman. Simply has targeted 1,500 distribution points by year end when they report. Oh, sorry. Let me back up here. Simply has targeted a significant amount of distribution points there in grocery stores, convenience stores, club chains, both US and Canadian Costco, and growing distribution points each month. As distribution grows, revenue growth rates will likely maintain significantly high rates. Trubar is growing fast on Amazon, going from a standing start of 50K monthly sales to over 1 million while watching its product rankings skyrocket. Hopefully that's enough of an intro. I'll let you guys pick up when we're finished with the intro here. But before we get into the presentation, just quickly. So Erica, it's not often you see a founder CEO behind a brand as strong as Trubar, and we know that it wasn't an easy road to get here. So I'm wondering if you can just give us the quick and dirty inception of the product and what sort of kind of unmet need you saw in the market prior to founding Trubar.
Yeah, there just wasn't a bar that was delicious and clean ingredients. I wanted something that you couldn't wait to enjoy, but then made you feel good afterwards. So that's where we hit it on the nose. And yeah, it was not an easy road to success here.
Perfect. And Kingsley, if you'd like to provide maybe a 90-second overview of how Trubar came to be nestled under your business and your brand group, which we can get into more during the presentation, but I'm curious about the inception story of that as well.
Adam, that's our opening slide. So, if you'd like, we could just move to the presentation, and I'll do a little background on me, our firm, and how we got involved in Simply Better, if that's all right.
Perfect. Yeah, I'll pass the mic to you guys to go through the presentation. As a quick reminder to our listeners, feel free to post your questions in the Q&A box by clicking on the bottom of the screen. And with that, the floor is yours. Thanks.
Okay, great. Thank you all for listening here today, and we'll get underway with this presentation. So the forward-looking information, disclaimers as always. And as I said here, a little bit about me and our firm, VRG Capital. I've been 35 years initiating, structuring, and monetizing private equity investments for our family. And at VRG, we're a group of family offices making investments in these 4 sectors that you see in front of you. There's 2 lead families, the Ward family, Cochrane family, and then we have these family office partners and some other family offices and institutions that usually follow us into our investments. Slide. So how did we get involved in this great story? It's been a little bumpy road. This story was brought to us. We're an investor in Claris Securities. I'm the chairman over there. And Claris got this on our radar back in February 23. We took a small position, I guess, a couple of board seats, and things looked like they were off on a great start under the former leadership. But sadly, the wheels came off the bus very quickly. A couple of quarters in, the lady in charge, Kathy Casey, at the time, was overspending on marketing all other brands and stealing resources actually from Erica to promote some Pure Kana was the main brand. Anyway, she had it on a trajectory to bankruptcy, and so we had to step in. And I took the chairman and CEO role February of 24, and we got pretty active. You see here financing highlights. We've raised 11 million in equity. We've led that. We extinguished 13 million off our balance sheet in the restructuring. We onboarded a new line of credit to do away with our factoring facilities. We put some more capital up, and I say the VRG team plus Erica and her family also supported additional working capital for the company. I recently committed an extra 10 million bucks just to make sure that we've got lots of working capital to execute our plan. And let's go to the next slide. And we got very busy very quickly, and within about 90 days, we executed most of what you see on this restructuring chart. We have the last piece of the puzzle. No BS is still in our world, but it's due to be sold closing June 30th this year. And that will complete closing or selling 15 of 17 operating divisions, I guess, under Simply Better. And it really allows us to execute the new plan, which is on your right part of your screen here, which is change the name of the public company to Trubar and focus on building our US business, Canada business, and also international. Erica will tell you more about that in a minute. So some financial highlights here. It's really all about Trubar. We have this small little cosmetics business with $1.5 million in sales. It's very insignificant compared to the Trubar story. So what you see in front of you here, Trubar revenue year over year, significantly up, gross profit significantly up, cash flow improved significantly. Next slide. On the balance sheet, cash balance, we ended the year with $7 million cash in the till. These are all US dollars, by the way. The working capital, positive seen there. And also we onboarded a total of 15 million of new credit facilities to give us a total of 20 million that we have in place today. Next. I think it's really important to bring your attention actually to, we report net revenue, but I think it's really important to look at what you see here in front of you. And we have the combination, which is Trubar and No BS, and maybe a little bit of legacy for 1 month or 2 months. So there's a little bit of noise in these numbers, but what you see is, Simply Better, still a significant, because Trubar was such a big contributor, you see a nice positive growth train. But I want to bring you to the Trubar year over year. Gross sales up 95%. Net sales up 77%. Now, let's just make sure we level set for some of you that may not be familiar with CPG. So difference between gross and net. Erica will get in there, negotiate with the retailer, offer coupons, discounts, and also at times sign up for listing fees. That is all taken out in trade spend. The difference between your gross and your net is that trade spend. Okay? But what you've seen on the numbers that are reported and what we've reported, for year end, those are the net numbers. Still extremely positive, but gross is extremely relevant. And you spend in the trade category to help promote your brand. And it's, Erica's just done an amazing job. You look at the quarter-over-quarter activity. Now it's a little skewed because of some major promotions that were put into the fourth quarter, but still, it's just a dramatic, growth story here. Next. So why don't I turn it over to you, Erica? Tell everybody a little bit more about this incredible brand you've built and how it all came about.
Thank you, Kingsley. Yes, so I'm Erica Grassman, the CEO and founder. As I said earlier, I really wanted something that just tasted good, that you couldn't wait to enjoy, that didn't sit in the bottom of your bag and you find 3 weeks later smashed up, that made you feel good. Because a lot of bars on the market, they either taste great, but then you feel terrible afterwards, bloating, discomfort, or they don't taste good and you're just kind of trying to get your way through it and get your protein and fighting yourself and not enjoying it. So this really is that bar that you can't wait to enjoy, tastes good, and makes you feel good afterwards. So here we are. They're vegan, they're gluten-free, they're soy-free, there's no seed oils, no sugar alcohols. It really fits for everyone. And we have flavors for everyone. I just keep coming out with more delicious flavors. They're all dessert inspired, but indulgent nutrition that it's delicious. That's really the first and foremost part of it with clean ingredients. So they have 12 grams of fiber. Okay. Yeah. So they have 12 grams of fiber and they're all under 190 calories. And also the global snack bar market, it's a $29 billion. And in our area, it's got a 7% CAGR. So it's just a very exciting time to be in this space. And of course, ours are just flying off the shelves because once you taste it, and that's why it's so important to drive trial. So here's our revenue growth, just showing how much revenue we grew and how we grew. And we had very limited resources. And, I've said this before, I was putting on my credit card, little Facebook ads here and there, whatever I could do to help grow this because we didn't have any funds. There was nothing for us as everything was being ripped away. So it just shows how we were growing and how we were able to stay just with this perfect growth spurt with literally nothing. So now we have a plan in place. Now I have a team that we're going to talk about soon. And so we have a great plan with increased distribution, which you can see we keep putting press releases about new distribution that we're gaining every day. Our velocities are amazing inside of those stores. And of course, I keep coming out with new flavors and different pack sizes to just keep the brand going and just get excitement. Every new flavor, we came out with strawberry shortcake and it sold out right away. And, we had another production right behind it. So just the flavors are amazing. So we have last slide. So we are working on our expansion into distribution. That's very important. We're going to continue to do that and continue to innovate as well as keep that marketing going. So what King was talking about, our net versus gross, like we have to build trial because there's people who've never tried it. They might have seen it, but if they see it with a coupon attached, they'll try it. And once they try it, they keep coming back for more. And that just increases our velocity and gets us more distribution. Now you can go to the next one. Here's our amazing team. So they're world class. I am so excited to have them behind me. It was me and 2 others for a long time. And so now I've got some real skills. There's like 100 years of Mars and CPG, from Dr. Pepper, L'Oreal, Red Bull. They're just incredible. And they all are perfect at what they do. Kate came in August. She's our VP of sales. She came from Red Bull and Sazerac, and Claire came from Mars and Kimberly Clark, and she has like 25 years. She's our VP of operations. So now I no longer have nightmares about ingredients. And Luke is our VP of finance. He also came from Mars and Dryers, and Natasha's doing marketing. So she came from Dr. Pepper and Bai, and everyone together. It's an amazing team that I'm really excited to see what happens this year. Here's a little bit about our distribution. So we have national, regional, and global. We started in 23 with about 4,500 stores. In 24, we got to 15,000 stores. And this year, we're going to do 25,000 plus. Costco is an amazing partner that we're really excited about. We launched recently in Mexico with them, and we're talking about other international markets, as well as, continuing our amazing success in the US and Canada. Walmart, we launched about 5 months ago, doing amazing. We gained more stores recently. And then Target, we went in about 3 weeks ago. So we're having amazing conversations with them, and we did a great launch. Whole Foods has an interesting story. I actually got into them through reaching out to someone on LinkedIn a couple of years ago, and we were regional. And when we had no funds, we were in 30 stores, and we ended up becoming the #1 bar alongside, all these other bar companies that had millions of dollars to spend on marketing and trial, whereas we were just this little brand who was beautiful and had great call outs. And we ended up being the #1 bar in those 30 stores. So then we eventually got nationwide, which is amazing. So there's a lot of regional in this slide as well that you can take a look at, and then global markets that we plan to, continue our conversations with. Here's our Amazon growth. So last year in Q1, actually in January, we did 40,000 in sales, just to give you a real breakdown. And this past month, I don't know if I can actually say the amount, but we did over $1 million. So you can just see that we're just growing like rapid fire. And I know a lot of people are talking about how our flavors are above top 10. So I think that we're right now ranked #8, and it's just really exciting to see, because that is truly showing how well we're doing in the stores. That this is a clear path of what people want. They try it in the stores, they try it from a friend, they see it wherever, and then they go and order on Amazon. So very exciting to see this. We are an asset-light company, so we have 3PLs as well as our co-manufacturing strategically placed across the United States, so that we can get to anywhere it needs to go in just a couple days. And then we also utilize broker sales network. So we don't have a huge sales team, but we use them as our sales team, and it's been very successful, and we're very happy with all of our brokers. And then our margin. So here's a little talk about our margin. So if our gross sales were $100, this is just to clean, our trade spend is $20. So that trade spend is used to build awareness and trial, which is the most important thing in a building brand. You want to get it in people's hands. You want them to try it so that they go out and want to buy it. And this is a bar that they'll want to buy because it tastes that good. And then you feel good afterwards. And so our net sales would be $80. Our COGS currently sit around $56, and that gives us a gross profit of about $24, gross margin 30%. So we are moving in the direction of having a lower trade spend, which it shows you in the next model, $16, and gets us to, and lowering our COGS price, now that we have someone in there who is full-time working on all of our COGS and our operations and getting our gross margin up. So it shows in the second one 36, and then it moves on to 40%. So that is the direction that we're moving in, and we're actively working on. Here's some of our innovations. So it's just showing different pack sizes, different flavors. We have minis that we've been doing for giving out, and we plan to do more with that. Different pack sizes, variety packs for Amazon. So just a lot of excitement that we're continuously working on, with also new flavors. And that's a club pack on the side with the cookie dough and, the peanut butter and jelly and the mint chip. And those are all retail specific, our retailers are telling us what they want. Here's a little bit of our marketing. So much excitement there. It shows everything. We've got our retail with our tags and our shippers. We're getting a lot of PR. We've been in like In Touch, US Weekly. Like just this past week, we had like 4 articles in print. We have, we're doing couponing, we're doing demos, we've got influencers involved, we're doing field activations. So just a lot of really exciting things are going on around us that we didn't have previously. So that's just going to create more growth and trial and awareness.
So
Back to you.
let me tell you a little bit about how our board came together, and then we'll ask Erica to wrap up. So I told you about my background, and one of the companies in our world, DCM, large marketing services business here in Canada, is run by this fellow, Richard Kellum. And Richard is a CPG guru, 20 plus years at Mars in the C-suite, overseeing some of these iconic bar brands that everybody is obviously very well aware of. He wasn't there when they bought Kind Bar for $5 billion, but he knows everybody involved and certainly knows the ecosystem. And it's been his ecosystem that Erica and I have been tapping on multiple occasions here to add those two of those spectacular teammates. At one point used to work for Richard. And there's just a whole host of other assistants that he brings to the party here. Another part of his ecosystem is this fellow Walsh, and Walsh was the former CEO of BBDO, a $3 billion division of Omnicom. And Walsh has been in charge of Mars advertising and marketing worldwide for over 20 years. He came up with some of those crazy ads that everybody's so familiar with the the M&M's characters and the you're not yourself when you're hungry ads. So just an amazing resource for us to tap into for the marketing and advertising ideas. Paul Norman, former president of Kellogg's, he was there and executed the acquisition of RX Bar. So again, some great sector knowledge. Of course, Erica just told you her story. Brock is from our world at VRG. We've been partners for over 25 years, and he is a corporate governance and finance expert and banker. And Michael Galero comes from the smaller cap world in Canada, and been involved in many small cap, mid cap companies. So it's that group of the CPG experts that are, kind of guiding us. And they're just saying, look, just stick to the knitting, continue to build our unicorn brand. We'll pause all M&A for now, but we should be staying in this better for you, protein enhanced category. And what they're telling us is, look, just get this business to $100+ million. And what's going to happen is one of these big boys is probably going to knock on our door, and we just get on radar screens of the big boys. They can't get involved in anything less than 100 and 100 million. And, who knows? We'll see what happens. But very, very attractive multiples are being paid for companies like Trubar. So there's a little bit of background there for you. Let's go to the cap chart. We have about 120 million shares out. We've been trading 90 to $1. And this important to note, this is Canadian dollars, right? It's obviously we trade on Toronto and the venture, and these are Canadian dollars. And this is equivalent to roughly 2 times our sales for last year. Those are net sales. Please make sure that you're making that connection there. And our ownership summary is as follows. I have about 10% of the business. Erica has 5% of the business. We've paid real money. We have millions of dollars invested alongside all of you folks, or with our investors. And our other management and directors have another 6% of the company. And we have onboarded multiple families into our stock longer term buy hold, players. We have in our network probably well over 50% of the stock in, call it, friendly hands. Rest of it's in the public float. So we could talk more about that if you have questions. Well, why don't I turn it back to Erica just to sum up our story for 2025?
Yeah, so just really excited. We're going to be gaining 25,000. We're going to get to 25,000 doors. So we're just very excited about that. There's over 100,000 doors in just the US. So, and those 25,000 are just in the US as well. So just really exciting because we're also very large in Canada. Working on a lot of new flavors, some seasonal, just have a really good innovation pipeline that's already built out. Can't share it, but really excited to show you once it's out. And we are really outpacing the category. So that's something that it's just phenomenal to see that Trubar is exceeding, the other bars that are in our category, and there's reasons. So if any of you haven't tried the bar yet, you need to try it because you'll see what I keep talking about. But our brand awareness is on the rise, and we are really getting noticed and remembered. So it's all just so exciting. So I'll leave it at that.
Thanks, Erica. So why don't we go to Q&A, Adam? Over to you, sir.
Excellent. Thank you very much. That was great. Really comprehensive, and we really appreciate all the detail. So as a reminder, if you have a question, feel free to click on the Q&A box at the bottom of the screen, and we will do our best to get through all the audience questions. One usually save some of the audience Q&A for toward the end, but one question that popped up that I think is a good one to start with, Erica, is if you can share a little bit more on your background and maybe some of your biggest learnings since starting Trubar, that would be a great place to start.
Yeah, my background, I was a communications major. I grew up in Buffalo, New York. I went to UCLA. I just, did some film finance, was in real estate, a mother of two, a great wife. I didn't know that I'd be doing this, but I dug in and committed myself. This is my third child, and I learned a lot on the journey, but I think just being willing to trust your gut and doing whatever needs to get done. I wear every single hat. I always have. I am not afraid to get dirty. I actually enjoy it. And there's so many lessons to be learned, but just really like getting out there and doing whatever is needed and trusting yourself to get it done. Hope that helps.
Excellent. Thank you. And as I go through these questions too, these are directed at both of you, so feel free to fight over who gets to answer, but unless I specify, they're directed to both of you. So maybe we can start or continue with the sort of obvious low-hanging fruit question. So how do you think you fare in an economic downturn or recession? And maybe just talk a little bit about, the value of your product within somebody's diet, or anything you'd like to share there would be helpful.
Why don't you start, Erica? Thoughts there, and I'll see if I can help.
Yeah, I think food is something that we always need to consume. I know people are eating less with the new shot out, but no matter what, you need to eat, and people want to enjoy food. So this bar is something that is delicious and it gives you that nutrients. So it's great. A lot of GLP-1 people are using it. It's giving you your protein. It's got the high in fiber, as well as with an economy, you always need something on the go. And this is something that can stay in your pantry. It's also reasonably priced for what you're receiving. So I think that it does really well in any kind of economic situation.
It's also a very, very large market, as Erica spoke to early. And actually, our sector of plant-based product, protein enhanced, is got a CAGR, depending on what report you read, of 14 to 16%. So, we've got some tailwinds behind us in the market. And yeah, I mean, are people going to look for cheaper alternatives? Maybe. But it certainly hasn't been our experience to date watching Erica build this great brand. It's once you try it, you never go back to any of the other brands. And so, we're quite positive about the growth ahead of us.
Excellent. Yeah, to that point, you have, Kingsley, you have talked about, or you just put out in the Q4 fiscal year 24 press release that you've officially announced a name change to Trubar Inc. and a pivot from what you had talked about as the M&A strategy. It's sort of the platform strategy. And it's always interesting to see somebody change their mind when something is working and be able to pivot and not kind of dig their heels in and say, this is what we're doing, which I can certainly appreciate from a management team perspective. So can you talk a little bit about that? Maybe what the big goal is from here, why the focus on Trubar now, the pausing of M&A?
Yeah, look, I think, Adam, really, it's a case of, multiple investment bankers advising Erica and I, and also large institutions, also large family offices. Sure, we can execute M&A. It's been what we've done at VRG for over 40 years. But what people were asking for is, why don't you take a little of the uncertainty out of this story at this point? Why don't we just focus on Trubar? It's got so much opportunity in front of it. Make sure that there's no shortage of resources that get dedicated to it. Earlier this year, after chatting back and forth, we've just made this pivot, and it's being well received. So you got to just listen to the bankers and the investors, and yeah, there certainly was a constituency of folks that kind of like we used to tell the story that we're in our M&A plan that we are looking for the next Trubar. But we've decided to make this pivot now, and we're super, super excited about it. Erica, any additional thoughts there?
No, I think that was perfect. It's the right direction that we wanted to kind of see where Trubar is going to go, because we know that it's just on this amazing path. And so why not just fully focus on it and not have any noise behind us, taking away from that.
Excellent. I can appreciate that. And then on the growth driver side, obviously you have distribution, improved volumes, new flavors, SKUs, et cetera. On the new flavor side, can you just talk about product innovation there, how new flavors go from like idea to execution? And then I have a follow-up there as well.
Yeah, of course. So maybe someone will say, oh, you should make this bar, or it's already probably on my list that I have running for flavors. And I talk about it with my R&D team, with my flavor team, and we just kind of come together and start playing around with how we want it to look: white chocolate, dark chocolate, what flavor notes are going to be behind it. And once we have that kind of discussed, then we start doing sampling, and we'll try a couple different versions, and then we'll have like little face-to-face dates or little Zoom dates like this, and we'll be eating it and talking about the flavor notes that are hitting and how they're hitting. And so we go back and forth for, it could be 3 weeks or it could take like 8 months. I mean, some flavors take longer. I was trying to do s'mores and I just couldn't do it. I just couldn't get that like smoky chocolate, the graham cracker all to hit. And I actually created this other bar that tastes even better, which I'm so excited to bring out. So yeah, sometimes they can be short and quick, and sometimes it takes a really long time. Like the mint chip took forever. There were so many different mints that you can pull.
And we should probably
Great,
give a
and then-
shout out to one of our
Yeah,
co-managers,
please go ahead.
who's been really, really helpful. Erica on the R&D front. You guys make a great team, and that's where the R&D is focused. Instead, it's moved away from your kitchen. It's really amazing what you guys are able to accomplish.
Excellent. Thank you. And then just as a follow-up, so when you do introduce a new flavor, is it easy to get in the doors of your existing distribution points, or is that a kind of a fixed thing with them? Like they ask for X amount of boxes of cookie dough or donut flavor, and now you have strawberry shortcake and you say, well, we can also provide these. How does that process work? And then maybe you can integrate pack sizes and innovation there around that question as well.
Yeah, so typically when we have new flavors, we'll give it to the buyer. We'll say, hey, we have this flavor, or they'll ask us, what new flavors do you have? Or they'll say, hey, we would like this flavor. This is really trending. Could you guys do that? And I always say yes, and then figure out how to get it done and get it done. But if we present them with flavors, they'll taste it. And if they love it, they'll want to take it in. So the strawberry shortcake we created and just put it right on our website and on Amazon right away, and then kind of shared it with the world a little. And so now it will slowly, you'll start seeing it in the doors. But that's kind of the process. And since we have such great D2C, it's really easy to just create a bar, put it on our site and our Amazon, and really see how people are receiving it.
Excellent. And then on the point of distribution, so we could spend a decent amount of time on this, probably more time than we have now, but obviously customer concentration is high in Costco, which has its pros and cons. And I'm curious if you can provide just some color on, or maybe some update on distribution points, how are efforts to diversify the customer base going? I know we covered a lot in the presentation and you put out everything publicly, but do you have sort of a dream distribution partner that you'd like to work with that you aren't currently working with? And then maybe we can just talk about Costco specifically.
Yeah, so Costco, first of all, has been enough. Oh, did you want to take it, Kingsley? I'm sorry.
So go ahead. I just want to add some comments. Maybe let me open if you don't
Yeah, you
mind.
open.
I want to just level set the clear picture for 2024 was we were about 80% Costco concentrated. Okay. Our goal is to get to be 60% or lower, but still build our business with Costco. Okay. Sorry, Erica, over to you.
Okay. Yeah, so obviously Costco's been an amazing partner, and we're so lucky that we have such a great relationship with them and have been able to use them. Not use them, but like have them as a partner. But we've gained distribution obviously in Walmart 5 months ago, in Target 3 months ago or 3 weeks ago. And then we have thousands of other doors that are coming on that we're talking to and in discussions with. So that is, as Kingsley mentioned, it is going to start, being a smaller percentage, Costco, that is. And we continue to just grow and expand, but still keeping Costco as a great partner.
Perfect. And then on the Costco side, so obviously you're accepting what I'm seeing as lower margin, maybe higher volume sales, and then also a brand building exercise. And maybe it's not totally quantifiable at this stage, but the right move to make where the Costco introduction to a customer gets them to taste the bar and then they can purchase it on Amazon or wherever they want direct to consumer. Is that kind of directionally correct in how I'm thinking about things? And can you just talk about kind of the trade-off between building the business through Costco with maybe higher customer concentration and then getting into some other channels and recapturing that margin over time?
Absolutely. You hit it right on the nose. It has so much trial and awareness, which is the number one thing in a brand that where we are right now. Everywhere I go, they're like, oh yeah, I saw you at Costco. I tried you at Costco. Oh, I have that Costco pack. So absolutely, that's like their entry point. And then there are only two flavors that sit at Costco at any given time. It's typically a pack of 8 and 8, two different flavors. And so they want to try all the other flavors, right? We've got 10 other delicious ones. So then they go on Amazon or our Shopify, or they'll see us at their local Whole Foods, or, wherever they see, a convenience store when they stop to get gas. And so they'll see it and pick it up and try other flavors. So absolutely, it's a great entry point.
And so as you get involved, obviously Costco does their multi-vendor mailers and you get involved with that program. And I'm sure there's been a lot of success there with, again, just generating more brand awareness. Can you just talk about the dynamics behind being involved in that program and maybe how it impacted 2024 versus your expectations for 2025? And what I'm kind of interested in is, were there more than one program? Was there more than one program in 2024 that maybe might provide a headwind for 25? Can you just talk around those dynamics a little bit, just from a top line perspective?
Yeah, there was more than one program in 24, and we hope to continue that momentum in 25. I don't know how much more to talk to Costco. without saying anything. But they're a great partner. We're happy to have them, and we want to continue that momentum.
All right, excellent. And then just on the inventory side, obviously, as you scale, you talked a lot about working capital in the presentation, and it seems like you're shored up, financially and just in terms of being able to tap in to the credit line. And obviously, Kingsley has been a huge resource as well in VRG. So, can you just talk about, working capital headwinds, your preparation for 2025 and 26? Any color you'd like to add there? It would be great.
Yeah, so we
Okay,
yep, go ahead. Go ahead, Kate. Got
Okay.
it.
Um, so I just want to, it's very simple. We are totally, completely funded to execute the 2025 plan, as we've laid out for ourselves. So there's just no issue in regards to working capital at all, Adam. So you want to add some color on that, Erica?
No, that's exactly what I was going to say, that, we have the working capital to grow and to run at the speed that we are going to.
Excellent. All right. Last question regarding maybe Costco and other retailers. But so as you think about your buyer relationships, as there's turnover just in that space, and as buyers rotate over a certain amount of time, is there a way to mitigate that risk, or is it a risk, or how can you kind of get in front of that? Obviously, if you have a great product with a great market fit, maybe that is the mitigant. But I'm curious if you can just talk around maybe just having to face a new person and re-educate them, if that's how you viewed it.
Yeah, absolutely. I mean, of course, that's a risk, right? You could have a buyer who just says they want to take a different bar in. However, our bar does really well. So, if something is doing well for them, there's no reason to make that move. So we're a really great partner. And I think you're still speaking to just Costco. So, I mean, we're a really great partner to Costco, as well as them being a great partner to us. So there would be, in my eyes, no reason. And I'm sure that they're already educated in Trubar. Nobody walks in Costco without knowing what Trubar is, right?
I see it in the front of the store, so that's good. Okay, perfect. So we've got a lot of questions rolling in from the audience, maybe more than we've ever had. So I'm gonna put my questions aside and just get to some of these as we are running up on time. So, and apologies if we jump around all over the place here. So, um, first on gross margins. So you've talked about getting to 40%. You had that nice slide that kind of laid out the way of looking at the math there. And you've said half of the improvement from current levels comes from a reduction in COGS. The other half, I believe, is trade. Can you just kind of talk about the drivers there and maybe detail how you get that improvement in COGS over time?
Yeah, just buying forward, as we increase our volumes, we can get better pricing on COGS, talking to, just having more redundancy, different avenues, being able to, it was just me who was purchasing I was doing all the procurement for all ingredients. Claire came on in December. So absolutely thrilled to have her here, but we're still just kind of getting into everything. And so we'll be, we'll be buying forward and just negotiating better contracts of ingredients.
Great. Are there any other levers that she's pulling? And maybe this is a good time to just talk. I don't think you're exposed, but maybe a good time to talk about any direct exposure to tariffs as it relates to ingredients.
Yeah, I mean, tariffs is going to affect everyone just because, cacao is not produced in the United States, sugar cane, there's plenty of ingredients that are just not coming, from our country. However, we are mitigating it as much as we possibly can, and we did run the numbers, and we are finding cost reductions in other areas to compensate for it, and it's very marginal right now. I also hope that it's not permanent. So,
And then you just mentioned, obviously increased volumes and scale means better purchasing advantages. Do you have a sense of the level of scale or top line growth you'd have to see before those kick in?
I mean, we're already seeing those. It's already occurring.
All right, excellent. Next question. So, do you have a figure for the industry average for trade spend as a percent of gross sales?
Yeah, across the board, it's 15 to 20%. So we're right there in line.
Okay, great. And then, so as you think about your defining a successful SKU or maybe flavor, do you have a sense of how, or can you share how you kind of measure that? You know, what KPIs you watch, how long a product has to be in a store, you know, how does it vary DTC versus retail? Any color you can add around that would be great.
It really depends on the store. So some stores you could sell like if it's single bar, like 14 a week a store, or it could be, and that could be great, or 3 bars a week a store could be great. It depends on the different, store level and store. So that's a hard one to just kind of hit off there's no average there. That makes sense.
Okay, excellent. Maybe a different sort of follow-up to that is the Amazon strength has been remarkable. You pointed it out in the presentation as well, and it does seem to be, I don't want to say concentrated, but there are flavors that are doing incredibly well that have now, as you mentioned, reached the top 10 in the bar category. And I'm curious, other than what you've talked about, is there anything you think is behind that, those flavors specifically? Again, just the growth on Amazon, the increased product rankings, anything you've observed?
Well, I think the flavors that have been in Costco are going to be our best sellers, be just because they've had the trial, right? The bars that we've had around for the longest, they're doing phenomenally well. And then if we're, having a marketing campaign behind it, like strawberry shortcake, that launched right when we kind of got a team of marketing, right? So that was our first launch that actually had something behind it than just throwing it on there with me and a couple people. So now we're going to see really how it is. Like there was no starting level because we didn't have a marketing behind it. So strawberry shortcake was the first flavor that was launched with marketing.
Okay, excellent. Yeah, that's a good topic as well, because you've laid out very clearly that resources were being directed away from Trubar under the previous management team. And now that you have resources being directed at Trubar, obviously you've beefed up the team significantly. You have people in place to handle things on the marketing side as well as other areas. Can you just talk a little bit about that? Maybe what have been the most effective marketing channels from your perspective, areas you'd like to kind of drill down a little bit further, et cetera?
Yeah, right now we're kind of covering everything as far as marketing goes, but we launched Target. Target was our first launch with marketing behind it. We didn't have any team 5 months ago when we did it with Walmart. So it was very exciting to see that Target sales were incredible right out the bat, just because we had a marketing team that it was planned, it was sought after, there was a strategic placement of how this should be done, whereas we didn't have that prior. So right now we're trying to tackle every avenue because we've never had it before and see where everything kicks the most and go from there.
Maybe I could add just on the numbers front that last year we had a spend of about $2 million in the marketing. Now that's below the net sales line, right? This year, we've got 8 million, Erica, right? I
Yep.
think allocated, and a new team, and we're freeing up Erica to be out there, telling our story. She's great in front of crowds, does just an awesome job, PR, and with the customers. So more time, Erica out front, a much more significant team and capital behind all marketing efforts. I think it's really going to show up in the results.
Excellent. Yeah, I can appreciate that increase in spend. It seems like the right move at this stage. And so a piece of that looks like events and shows. We see you. One of the cool things about it, CPG brands and Trubar in particular is that it's very tangible. You can taste the product. We see your Instagram account. We see you out on the road. You've got the Trubar, costume on at shows and stuff, which is great. And I'm wondering, as you do those things, how big of a role those events play in getting increasing brand awareness, and also maybe what feedback you're getting from doing that. Things you want to change or do differently, stuff you're getting from customers when people sample it. What are they saying? I'd love to just get your take on high level, just what you're hearing overall when you do things like that.
If they taste it, they love it. Everyone is like, holy moly. Like that's absolutely the number one thing we hear. They can't believe how good it is and how delicious it is. And yes, I'm passing them out everywhere I go. I flew last night. I landed at 5 in the morning this morning, and I'm handing out bars, like, oh, here guys, you want some donuts for breakfast? Like I'm always just handing them out. And that's maybe why my energy is a little low. So Kingsley said to have an extra cup of coffee, but but yeah, so I think that those shows are incredible, just being out there, being loud, being we have a personality behind the brand, right? It's super funny and happy and exciting and lovable. It's kind of that brand. If you look at our Instagram, you just like smile. I hope. I hope that's what people are doing.
Excellent. And then on the name change front, do you have a timeline for when we can see the name and ticker change? And then as you think about uplisting to the TSX, maybe a larger US index, can you just talk about plans surrounding that?
Yeah, sure. Sometime over the next few weeks, we should be able to get all the legal process completed to be able to make the name change. And look, we're thinking about a possible upgrade to Toronto later this year, or to the TSX, and thinking abroad down the road. So there's no specific timetable on that at this point. It's about focusing on building the brand right now, is what 2025 is all about for us.
Do you have a ceiling for DTC growth or revenues as a percentage of the consolidated? And as you think about, excuse me, higher M&A multiples in the future, obviously, or maybe we can just talk about the significance of Amazon and DTC revenue growth, or just that mix there as we move forward.
Eric, do you want to take that?
I'm sorry, I didn't hear the question. I apologize.
No worries. So I wanted to just ask about the significance of DTC revenues and Amazon specifically. As you think about, potentially selling Trubar down the road or getting the right M&A multiple, can you just talk about the significance there, and maybe if you have a ceiling for what you'd like to see in terms of like the mix shift or percentage of revenues that are derived from DTC?
So our DTC is very important because that is showing exactly what consumers are looking for. I don't know the exact mix that we would be looking for. We just want it to grow. The way that it's growing, it's phenomenal. Right now, we are, I would just say we just want it to continue to grow. I'm sorry, I don't have a number for you.
Let me try and give it back a little bit of color back to some comments we made earlier. Okay, Adam, we are trying to move from 80% Costco concentration in 2024 to a 60-40 mix Costco and all other channels. And look, DTC's got better margin, and then you got grocery and convenience in the middle, and then you got club, they tend to be, on the discount side of things. So you wanna continue to move your distribution. That's our goal for this year. Okay. And who knows where DTC is going to land in that 40%, but hopefully that helps a little bit with some color about the sort of plan for 2025.
Yes, thank you. And then as you enter into new stores or distribution points, what's the tracking process like from a data perspective, or just even manually, as you think about how sales ramp to like existing levels of other stores? Can you just talk a little bit about that? Let me know if that makes sense. I feel like I worded that question oddly.
I mean, I think you're saying like, how do we compare to other brands? We use a data system. Is that what you're asking?
We can talk about that, but more so how long it takes to kind of scale to existing store levels when you enter into a new store, and the process for kind of tracking that.
Oh, okay. So like I said about one of the ones that we just recently launched, we right off the bat we're tracking alongside all of our competitors, and then we're starting to surpass them. But that's because we had a marketing plan behind it and it was planned strategically and properly. Whereas maybe another one, people didn't hear about it, know about it as soon as the first few weeks, and it took a little bit for it to peak up. But it is fairly quickly. We try to get trial with either coupons or sampling. And sampling is our biggest driver because once you taste it, you see that it's delicious and you want it. But we see such a huge increase in sales on the days and the days following of sampling. Hope that answered it.
Yes, excellent. Thank you. And then I know we're kind of running up on time here, so maybe we can wrap up with one or two more questions. And really appreciate the time. So maybe Kingsley, we could just get a refresher on kind of value creation on the Trubar side. So in the event, I certainly would love to see, heads remaining down and just focus on growing the brand. But in the event that you get an offer to sell it, how are you thinking about, distributing the proceeds? What percentage of the sale price do you plan to retain? What's the sort of preferred method for, I guess minority shareholders? So I'd love to just get your sort of, or for you to reiterate your take on that, if you don't mind.
Sure, Adam. And this came back to also, the conversations with the bankers, analysts, institutions, family offices saying certainty. And they wanted certainty around this point. And I can guarantee you that the vast majority of all proceeds that come from, if there is a liquidity event down the road, will be distributed to shareholders. Okay. Eric and I are the two largest. We like distributions. You got to leave a little something, because chances are if we do have a sale, it'll be for the Trubar division asset or the wholly owned sub, not the pubco. So you got to leave a little bit in the pubco and go figure out how to maybe go look for the next Trubar then. But it's going to be, again, the vast majority of the proceeds will be distributed to our shareholders.
Excellent. Thank you. And we can wrap up here. So no discussion about a company or with a management team is complete without sort of talking about, what you're worried about, what keeps you up at night as you move forward here. How do you think well, maybe let's just talk about, what kind of worries you from a competitive standpoint, growth standpoint. Anything you'd like to share would be interesting to hear.
So for me, I used to have nightmares all the time about ingredients or packaging, or I'd be like, did I forget something? But I sleep like a baby right now. It's really amazing. I feel like we're on such a roller coaster, just going straight up. And I'm just really excited. So if there's anything that keeps me up, I'm just like excited about, my meeting next week, or what's happening tomorrow, or, what's going on. So really just positive vibrations in all aspects. I'm just really excited. So there's nothing really that's troubling me at this present moment.
I'll
All right.
share that I love everything that we are executing on in this business. And you saw that one of the initiatives is a full ERP solution up and running here. And the goal is to get that up and running by the end of this quarter. And I'm hoping that the team's and we're very confident that the team's going to deliver there. But, there's always a little risk in getting that fully up and running. Now you're going to have redundant systems, but so there's something we got to, keep you up at night, I guess. Could we have a hiccup there? Yes, but it's not going to upset the entire company. This is a system that's meant to guarantee better execution and supply to all our retailers as we continue to grow those numbers of retailers at a significant pace. And we got the team. It's a world-class team. So there you have it, Adam.
Excellent. Thank you for your candor. I appreciate it. Spoken like entrepreneurs with skin in the game. So that's a great place to wrap it up. Really appreciate your time. Thank you so much for all the color and comprehensiveness around the business. Thank you for doing this presentation. As a reminder, once the recording is available, we'll distribute it via YouTube. And just want to say thank you very much again for your time and keep up the great work.
Thanks for having us, Adam.
Thank you,
got it.
Adam.
Thank you. Have a good one.
You too. Bye-bye.